Welcome to Coin Universe, your go-to hub for the latest news, insider views, and overall opinions from the crypto cosmos. I'm Trinity, and I'm thrilled to dive into the latest updates with you in this video. Today is January 22nd, 2024, and we are moving on to our first topic. Are Bitcoin longs waiting for sub $40,000? 5 things to know in Bitcoin this week. As the fourth week of January unfolds, Bitcoin's trading landscape is far from stable, with the current price resting at $40,605. Despite reaching 2-year highs, a cloud of uncertainty looms over the cryptocurrency bull market as holders actively de-risk. The price action of BTC continues to face challenges, with bulls taking a backseat and the crucial $40,000 support level inching closer. Traders are now grappling with the question of whether Bitcoin longs are anticipating a dip below the $40,000 mark, even after the much-anticipated launch of the United States' first spot Bitcoin. Exchange-traded funds, Bitcoin's price remains in a delicate state. Analysts are now shifting their focus to potential catalysts for volatility in the coming weeks, trying to discern the impact on Bitcoin's trajectory. The upcoming week is described as a calm before the storm in the midst of macroeconomic shifts. The Federal Reserve's interest rate decision on January 31st and the impending Bitcoin block subsidy having created an atmosphere of anticipation. Analysts emphasize the need for a closer look at how these factors may influence Bitcoin's trajectory. Despite the relative calm, the battle for Bitcoin price support is intensifying, with Bitcoin already experiencing a nearly 20% decrease from its recent highs. Coin Universe delves into the current landscape, presenting insights from market participants to offer perspectives on where Bitcoin might be headed in the midst of this ongoing battle for support. Bitcoin traders are closely monitoring sub $40,000 levels for potential long positions. The latest weekly close for Bitcoin, its lowest in over a month, indicates ongoing market challenges. Despite a final push that briefly reintroduced $41,700, a subsequent $1,000 downturn preceded the weekly close. As of the current writing, Bitcoin is striving to maintain the $41,000 level. Overnight analysis highlighted bid support at $40,500 and below, providing crucial liquidity that supported the market. Popular trader Skew observed substantial bid depth below this level, suggesting strong demand for Bitcoin. A chart displaying Bitcoin order book liquidity on Binance, the largest global exchange, accompanied Skew's observations. Despite the bid support, there is a potential breakdown through $40,000 according to some traders. However, bid interest is consolidating above $35,000, making this range an attractive option for potential long positions. The current Bitcoin price zone is deemed significant by traders, with Skew emphasizing its importance on a 12-hour and daily close basis. Decent Trader, a trading suite, noted the repeated testing of the $40,000 and the $41,200 area over the past 2 months. Additionally, Decent Trader reported a bullish turn in one of its proprietary trading tools, composed of popular indicators. As the market navigates these critical levels, the question remains, will the $40,000 and the $41,200 area continue to hold up the price? Traders are actively monitoring the situation, considering the potential for both breakdowns and rebounds in Bitcoin's price. Navigating the upcoming macro week, insights on GDP, PCE, and the intersection of traditional markets and crypto, the week ahead holds significance for U.S. macroeconomics, with crucial data releases occurring during the Fed blackout period. While these releases, such as the preliminary Q4 GDP and the Personal Consumption Expenditures Index for December, may impact market sentiment, their influence on the Federal Open Market Committee's decision on interest rates at the January 31st meeting might be limited. The PCE index, recognized as the Fed's preferred inflation gauge, is of particular interest amid a mixed scenario for inflation. Despite stock markets reaching record highs, recent data prints indicate that price rises are surpassing expectations, creating uncertainty about the possibility of rate cuts. As markets await the FOMC's decision, current data from CME Group's FedWatch tool suggests a high likelihood of rates remaining unchanged next week. This apparent consensus reflects a lack of anticipation for unexpected moves by the Federal. Shifting focus to the cryptocurrency space, a growing contrast between Bitcoin price action and traditional equities is emerging. Former BitMEX CEO Arthur Hayes highlights the divergence, emphasizing the need for the return of global liquidity to support crypto markets. He points to potential challenges ahead, questioning the simultaneous stagnation of the S&P 500 and Bitcoin prices post the U.S. Bitcoin ETF launch. Arthur Hayes also draws attention to another critical event occurring alongside the FOMC meeting, suggesting that it will provide insights into U.S. liquidity conditions going forward. Against the backdrop of these developments, the upcoming weeks hold importance for both traditional and crypto markets as investors navigate through a complex economic landscape. Meanwhile, capital investor Scaramucci discusses ETF buying delay and Bitcoin market dynamics. Anthony Scaramucci, managing partner and founder at Skybridge Capital, shared insights into the delay in ETF buying and its impact on the Bitcoin market. Market participants are urged to exercise patience as Bitcoin price strength deviates from the initial bullish narrative surrounding the ETF launch. The Grayscale Bitcoin Trust, now an ETF itself, is undergoing a significant reshuffle as investors opt to cash out. With GBTC's share price closely aligning with the Bitcoin spot price, data from Bitcoin treasuries reveals a sharp decline of almost 100,000 Bitcoin in GBTC holdings this month. Investors in GBTC are strategically shifting to other ETF products with more favorable terms. Scaramucci explained that regulatory considerations are likely to slow down ETF inflows, particularly due to a 30-day cooling-off period after selling, during which investors cannot re-enter the same product. He highlighted the great arbitrage opportunity presented by this period. Adam Back, CEO of Bitcoin technology firm Blockstream, anticipates a possible step-up in buying 30 days post-sale. He noted the scale of ETF inflows, emphasizing their significance, being 30 times larger than the supply impact of each halving event. Back also discussed the influence of traditional finance led by broker sentiment, characterizing them as momentum buyers whose actions contribute to market dynamics. Meanwhile, Bitcoin is experiencing one of the lengthiest periods of profit-taking in its history, even with prices well below all-time highs. Data from on-chain analytics firm Glassnode, uploaded to X by James Van Straten, a research and data analyst at crypto insights firm CryptoSlate, reveals a solid 3 months of profit-taking. Van Straten commented on the data, stating, "This was eclipsed by the 2021 bull run from September 2020, which ended in February 2021. The data suggests that current buy and sell dynamics may be a reaction to the ETF launch." As reported by Cointelegraph, the ETF launch triggered a sell-off from $49,000, leading to mass market exits from short-term holders selling Bitcoin at a loss. Whales are in focus as distribution takes hold. Despite being nearly 20% below the post-ETF top, sentiment in the crypto market remains greedy. The Crypto Fear and Greed Index as of January 21st measured 55 against 100, still within its greed bracket after almost reaching neutral territory. On January 11th, it reached highs of 76 against 100, equivalent to the mood when Bitcoin hit its current all-time highs in November 2021. These numbers coincide with changes in Bitcoin investor cohort exposure. According to Wise Advice, popular crypto educator, whales are selling off and other larger entities have reduced their holdings. They currently hold their lowest amount since June 2023, indicating selling or distribution, particularly among wallets with 10 Bitcoin to 10,000 Bitcoin. Accompanying data from research firm Santiment anticipates the return of accumulation among whales. And we are heading into a very important week, and this will impact the Bitcoin price. The key to getting through this is to primarily dollar-cost average Bitcoin purchases, in other words, stay cool and stack sats. This was it for this video. Thank you for watching. If you like the content, please like, subscribe, and click the bell notification. Last but not least, don't trust, just verify, and strong hands everybody. Until the next update. Disclaimer: despite the careful and professional assembly of this content, none of our videos constitute financial advice. The content provided by Coin Universe is purely intended for informational and educational purposes.